With CPI data just around the corner, how may this shape the macro and short-term projections for Bitcoin? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. We have a very informative video today. By the end of it, you're going to have a complete and comprehensive understanding of inflation, how it impacts interest rates, and how that shifts the macro direction of asset prices. We're going to apply this information to the short-term structures on Bitcoin, discussing how the result of CPI could potentially shift Bitcoin's price action today. Along with that, we're also going to be taking a look at the structural and technical indicators to assess the strength of the short term and the macro charts. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If you're interested in this kind of content, join us on Telegram. It is the second link below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and of course the markets. If you're interested in our trading channel, you can get access to exact entries, exact targets, exact stop losses for every single trade we post. And we post a whole heap of trades. You'll find access to information, exclusive analysis, justification, and of course a variety of trades for both Bitcoin and altcoins. You'll also get access to our trading chart and education chat. We teach you guys how to trade. We develop your trading skills and market psychology. You get access to our trade setup chat. We have members posting their own trades. We get access to our news chat, our video chat, our help chat, and our general chat. Everything you need to stay in the loop with the market. Go ahead and contact us via the pinned comment in the free channel to get access, and click this link to see our entire trading track record. Let's get into a video because there is a lot to discuss. I want to get through today's video quickly. We'll start on the market data as per usual. As for Bitcoin's monthly return, August is in the positive by a very slim margin, 1.12%. 24-hour volume is at 58 billion. You can see it on the top left-hand corner of the monitor, down 22% for the last 24 hours. We do anticipate that to rise moving into the economic data tonight. 24-hour liquidations are down 35%, sitting at 54 million. Not too bad, not too bad. Looking at liquidations, as per those liquidations, the majority of the liquidations did come from those long positions, with a short amount from those shorts. If we look at the price action for Bitcoin, we did see exactly what we expected yesterday, and what we expected yesterday was, very simply, resistance is resistance until it is not, and we explicitly said in yesterday's video, at resistance in this range, it is a great time to be taking profits on your longs. You can keep them open if you want to, but take profits on your longs and start to take some shorts as hedges. That is exactly what we did. We made some profit on our longs, we're in some shorts, at massive profit on those shorts, played it perfectly. Congratulations, whoever followed along. Moving from there, we can go ahead and take a look at the volatility index. The volatility index is at record lows. And for those of you who are new to the channel, we talk about this every day. The volatility index on the 30-day and the 60-day are at record lows, right? We're sitting at 1.23 on the 30-day period, the lowest point we have seen in the last 4 years, right? The last time we saw this was July 2020. If we look at the 60-day period, we are at the lowest point we have seen since 2016. Insane stuff. With massive compression, massive reductions in volatility, we do see big moves to follow. Think of volatility like a pressure cooker. When it increases over time, we see a big move. And when it decreases over time, we see compression and consolidation, which also results in a large move to follow. So both of these scenarios are very, very important. And this is definitely something we're watching for a spike later in the year. Moving on, guys, the DXY is testing a major level of resistance, a downtrending diagonal resistance. And I do urge everyone to watch this level today, particularly over the next week, as we do need a daily close above to validate a breakout and a weekly close above to confirm that breakout for a continuation upwards. If we do go upwards, we're looking for a target around 105 to 106, this level of resistance over here once more. If we're looking for a move down, we're looking for a move back towards that 99 to 100 level. Of course, If we move upwards, this is going to be bearish for the markets, and if we move downwards, this is going to be bullish for the markets. So here comes the really informative information. CPI data is coming out very soon. Now, CPI data has a direct impact on the DXY as the DXY moves based on the strength of the dollar. And of course, as we know, if inflation increases, the probabilities for interest rates to rise increases. And if interest rates increase, the cost of the dollar increases, right? The cost of debt increases, the dollar rises in value. So inflation is almost like a leading indicator for interest rates. And if inflation rises, we generally see a front run of the market adjusting to potential future interest rate hikes. And we'll talk about that in a second. So let's go ahead and take a look at inflation. As we can see, we have core inflation, inflation month on month, year on year, and of course, core year on year coming out today in less than 12 hours. As you can see, the previous results were 0.2, 0.2, 4.8, and 3%. What we are looking for is the previous and forecast. Those are the two main things we're looking at. Here is the thing, guys. If we see inflation lower than the previous, it is going to be bullish, right? If we see inflation lower than the previous, it's going to be bullish. If we see it much lower than the previous, it's going to be progressively more and more bullish. If we see inflation come out and is higher than previous, that is going to be perceived as bearish. And if it's massively higher than previous, that is going to be perceived as very bearish. If we see the data unchanged, it is going to be a non-event. And then the prevalence of what the potential future interest rates probabilities could shift to, we based on future leading data, such as PPI tomorrow, okay, such as retail sales on the 15th. These will be the major news events we are then going to be watching. If we take a look at how inflation directly impacts the market, we take a look at the specific flow chart right over here. As we can see, we have leading data such as PPI, such as retail sales, such as NFP, all this kind of stuff that tells us what inflation is doing. Then we have the inflation data itself, CPI, which is a direct reflection of what inflation is doing over a set period of time or a particular month. Inflation data has a direct impact on future interest rate decisions. If we move up to this chart over here, we can see our inflation and interest rate curve. As we can see, we have inflation represented by the blue line and interest rate is represented by the red line. As inflation rises, we then generally see interest rates rise as a consequence. Now, if inflation rises once, is kind of disregarded, it's irrelevant, but if it starts to rise consecutively month after month after month and increases, that is generally when we see interest rates rise, and that is why interest rates are delayed to inflation, okay? When we see interest rates rise, that is when we see the debt to service ratios change for consumers and for, of course, companies. If we see the debt to service ratios change, we generally see available household cash flow decrease as more cash needs to go into their short and long-term liabilities, such as mortgages, such as car loans, such as short-term debt, all that kind of stuff. If we see companies debt to service ratios increase, we can see stuff such as operating costs increase. We can see stuff that, again, eat up cash flow. And what will companies do? They're less likely to invest. They're more likely to sell off assets. And that is why we generally see the market correct when we expect interest rates to go up. And the market corrects in anticipation of that. So if we see inflation rise, what we are saying is the probability of the future interest rate hike to also rise increases, and therefore, since the market knows what will occur if that happens and how that directly shifts the systematic risk in the market does correct in anticipation. So the CPI data is very relevant to set the precedent of the next few weeks of price action. Let's go ahead, guys, and take a look at the stock market. As we can see, the S&P 500 is at this major level of support, 4,500. Again, if we do lose that level, we can see a move down to our next liquidity loan zone at 4,300. Again, we are in an overall uptrend, so don't be surprised if we do bounce upwards again. But again, this is an overall bearish trend. It is a rising channel formation, and therefore, if we do correct and do lose this uptrending support line, we could potentially be going much lower. But until then, uptrend remains intact. We are now testing support, but your risk return in favor of longs is not really there anymore, right? We have been telling you, be long since down over here. We're being bullish ever since, the end of last year. But we're telling you now, we're coming up to these high points. We're coming up to resistances. everyone's starting to get bullish again, now is a time to be looking to lock in profits and not to close out longs. We're not telling you to get out longs. We're telling you to look for potential short opportunities just to hedge any downside risk. Remember, your job is not to be right. Your job is to make money. Your job is to make profit. Do not make decisions based on ego. No one cares. Make decisions based on the money you can potentially profit and make those decisions from a risk management perspective. Let's go ahead, guys, and jump into Bitcoin. So a lot to discuss, and we'll go ahead and talk about the short-term price action first and then talk about the macro chart. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So on the short term, we saw a pretty strong move up for Bitcoin in the last, 36 hours. The move took us really high. It actually took us up to around 30,200. But again, as we can see, we perfectly tested this POC level. We actually did not break above it. So first and foremost, we'll work from the top side down. The major level we need to break above still for the bulls to fully reclaim control and push the prices back into this 31.3k zone. This zone up over here is going to be 30,400 to 32,200. This is going to be our bullish trigger. The bulls need to get the price above that liquidity level to push the prices up even higher. Until then, as we've been saying, every single one of these jumps, every single one of these moves upwards is an opportunity to take out profits on your longs and scale into shorts to catch these rejections. How low these rejections will go, that's another question we'll answer in today's video, but I'm definitely also taking profits on my shorts at the moment as we have entered this VRPV gap, a perfect time for Bitcoin potentially to find support and either continue upwards or lose support and break further down. The point is, if we take a look at our historical order volume, which is going to be represented by the VRPV, this is a horizontal scale of how much orders have been placed within this price range. Put very simply, if we see higher VRPV, this signifies increasing resistance towards this liquidity zone. If we have more orders and higher resistance, the market requires more volume to push through, right? It requires more strength. If we look above this level, we see the VRPV falling. That means we have decreasing resistance and therefore the market requires decreased volume, and thus the volatility increases as the price moves upwards, and therefore we're more likely to see a continuation upwards when we're above this point than when we're below it. Remember, it's a game of probabilities. If we're looking for the point of which we see a probability shift in favor of a continuation upwards, that is above 30,400, okay? That is what we're looking for. As for the short-term price action, we have seen a pretty steady rejection, pretty nasty rejection. Let's take a look at what our technical indicators are now suggesting. We'll go ahead and start off on the 12-hour chart. So what we did see was a nice strong momentum shift, right? We saw a momentum shift. We saw the RSI break toward the upside of this downtrending resistance. This indicated a positive momentum shift. In fact, we saw the momentum flip positive, and just after we saw the momentum flip positive, we saw that continuation upwards into the next liquidity zone for Bitcoin. Like clockwork, it worked out perfectly. But there is one thing on the chart right now that is suggesting weakness, and that is going to be the CVD. And we talked about this yesterday. The CVD, the cumulative volume delta, is suggesting there is weakness. There is not strength over here. This is a move formulated on weakness, and therefore we could potentially see the price reject. And it's hard to say for sure right now, looking at this time frame, whether or not that rejection was the rejection and we're continuing upwards. But when we get into the shorter time frame in a second, we'll answer that. But for now, it does say weakness. It did say weakness yesterday, and that was one of the main reasons we looked into shorts and we saw that pull back down. If we want to see a continuation upwards, we need to see three things. 1, positive momentum. 2, structural liquidity levels broken. And 3, positive volume. Remember, when we saw the break upwards, we saw two things. We saw the structural level break, perfect. Momentum flip positive, perfect. But our volume didn't, and therefore this move was likely to be just a move upwards and then a correction, and that is what we have seen. So always watch the CVD, always watch what the volume is doing, and volume by itself is irrelevant. You have to look at the required volume. Again, volume by itself is irrelevant. It is the volume in current periods in comparison to prior periods. And that is why we're not just looking at the volume rising, we're looking at these prior tops. We're looking, what is the volume doing now in comparison to these prior highs? Because if we break through these prior highs, we have a dramatic shift in volume in strength greater than what we have seen in the past 30 or so days. So the required volume is just as significant, if not more significant, than the current vertical volume on any particular bar, okay? The volume without context is pointless. So you need to apply context to your analysis, otherwise it's meaningless. You need context. So let's go ahead, guys, and jump down to an even smaller time frame, and then we'll go ahead and finish up on the higher time frame. So the main thing we want to talk about today is, what impact could CPI have on Bitcoin? What impact could CPI have on Bitcoin? So first and foremost, let's go ahead and draw in our parallel channel. As we can see, we had a perfect rejection down towards this parallel channel right over here, perfectly tested at support, and it has now bounced. If Bitcoin loses this level, we can expect a continuation lower into the mid level of that channel towards a POC and towards that dashed trend line. If Bitcoin rejects from that low, we expect a continuation lower. Until then, support is support until it's not, and expect a move upwards until two things occur. Number one, we exhaust, or number two, we hit liquidity. If CPI comes out bullish prior to Bitcoin breaking down, expect a move back into this range, potentially even a move to 30,400. If CPI comes out bearish, it doesn't matter where Bitcoin is, we are going to see that correction into this level. Looking for support once more at around 29,200 to 29,000. Let's go to the high time frame, guys. For the high time frame charts, there's two things we are watching. Number one, we are watching for momentum, and number two, we are watching for our trajectory of price action. Momentum, starting easy. For the bulls to push the price over 32,000, we need to see a positive macro momentum flip. Therefore, the price will need to get above this trend line. If the price gets above this trend line, that will be a very sure sign that Bitcoin is likely flipping strength back to the positive side on the weekly chart. Remember, right now, the weekly chart is bullish, but it is losing strength. Okay, it's bullish, but it is losing strength. It's losing strength as the daily chart has been bearish now for the last 2 months. So if the daily chart wants to turn bullish again, the momentum does need to shift. Number two, if we see a negative momentum shift, we will most likely see a breakdown. So if the price comes down, momentum breaks through this level, we're likely going to see a breakdown. Where could the breakdown take us? We're looking for our next levels of liquidity. A very obvious level of liquidity is sitting at 25.2 to 24.8. That is going to be the target for the bears if this trend breaks. But do not forget the most important rule of trading. Support is support until it's not, and resistance is resistance until it is not. Do not front run these decisions. Think about them calculatedly, okay? Prepare, plan, and analyze. Do not sit here saying, yes, there's a 100% chance Bitcoin is going to correct downwards, when literally nothing right now, and I mean nothing right now, is telling us Bitcoin is going to lose this trend line. It doesn't mean that might not change. We could definitely see shifts. We could definitely see the price come down. We could definitely see the momentum come down and it actually lose it. On the short term, we could definitely see rejections lower and continuations downwards. But 28.4K, again, is that major level of support for Bitcoin, and I'd even go as far to say it is the last line of hope for the bulls right now to defend this uptrending support level. If 28.4K is lost, we are going to be testing, potentially breaking down from this macro uptrend, okay? 28.4K is the last line of defense. If we delete everything on the chart and we had to look at 2 points, right now we are quite literally in a battle between 28.4 and 30,400. We are battling between these levels. If we break above, bullish. If we break below, bearish. If you want to look at the higher time frame and zoom out and keep it very simple, those are the 2 levels I'll be watching. Thank you for tuning in, guys. I hope you have an excellent day, and I'll catch you guys in tomorrow's video. Thanks.